Good day, great viewers out there. It's my pleasure to meet with you once again today. Last week, last weekend, I couldn't upload any video on Forex because of some technical issues, network issues I had uploading. I really felt bad. I wasn't here to say something to give you a direction. But I just hope that you were really good on your own. Right now, I'm back again to give you a guideline on what you are likely to expect this week in Forex, what you're likely to expect onwards. Okay, thank God for some time now, our predictions has really been working out. The USD has been maintaining its strength for some time now. And the market this week, we are really going to see what it's going to turn out to be. We have some data that are coming out. We have the UK employment, unemployment rate that is coming out. We have the RBA, the Australian Bank is going to read their minutes, their rate cut minutes. Federal Reserve of the United States, Fed Chair Jerome Powell is going to make a speech. BOE, the Bank of England, they are going to make a speech to the Governor of Bank of England. Even the ECB, the President Lagarde is going to make a speech too. So these things are things that may shake the market, but we are going to see how far they are going to shake the market anyway. There are certain things I want us to pay particular attention to, which I wrote down on the board here. I wrote down analysis on the GDP. I wrote down analysis on inflation, analysis on unemployment rates of the 8 major countries that I would like us to pay attention to. I'd like us to pay attention to the Australian, the Canadian, the Euro, JPY, that's Japanese, the New Zealand, the Switzerland, the UK, and the United States. So I'd like us to pay attention to their GDP, their inflation, and their unemployment rate. Now let's go to the board. Now, this is the yearly rates for GDP for these countries, and this is their quarterly rates, their changes in quarterly rates. Okay, like for example, in Australia, previously, that's presently right now, their GDP is at 1.8 yearly. For the yearly rates, their GDP is at 1.8, and then quarterly, the last quarter the last quarter just released, the GDP increased by 0.6. Before then, it increased by 0.3, and before this time, it also increased by 0.6. So these are the data written down for each of these countries. This one is inflation, the yearly rate, quarterly rate, and the monthly rate. And this one is unemployment rate. Now, the figures in the bracket there is the range I expect. We think that when GDP is within 2.2% and 3%, that it is good. Okay, it is a good to go GDP. When inflation is at 2%, it's just okay. And then when unemployment fluctuates between 3.5% to 5%, it's just naturally good. Okay, so now I wrote down here, I said we shall tick asterisks for countries with low consumer demand, because we are going to tick asterisks for countries with low consumer demand. Then we shall tick good, that's mark, for countries with high consumer demand. The reason is because when a country has a high consumer demand, it's going to do well. Its currency will be on a high preference in Forex market. So, but if the consumer demand of that country is low, its currency will be on a low demand or low preference level in the Forex market. So now, I noted here that high inflation doesn't mean high consumer demand. Okay, example, the inflation in block signals. These inflations that are in block signals Like this one, the Japanese yen, their inflation is 2.7. New Zealand, their own is 2.7. Switzerland, 2.8. And then UK, 3.9. The fact that these inflations are high doesn't mean that it is a green signal for the currency to be preferred in forex market. No, that's not a green signal. Okay, so it's just sometimes the high inflation could be as a result of supply chain disruptions. It could be as a result of some circumstances, high tariff or some certain things that is making the inflation to jump up. But the main thing that we need to consider to say that a country has a high consumer demand is in the unemployment rate. If the unemployment rate stays below this range, 3.5 to 5%, and on the monthly rate or quarterly rate, it is edging up, sorry, it is coming down a little or edging up with a small amount or coming down, like the United States, look at that. Even though it's edging up by 0.1%, but it is still within this interval. We can say that there is a high consumer demand because the unemployment rate is still okay. Okay, even though it is a kind of having a high risk, but still it is just okay. Then look at another thing that will confirm that they have a high consumer demand is the GDP. The GDP of the United States is actually high, 3.8%. It is within the range. It is even above that range, 2 to 3. And when it crosses that range, 2 to 3, it's still good. Okay, when it's within that range, it's still good. But we don't want it to be below this range, maybe 1.5, 1.4. No, we don't want that. We want it within that range. So those countries I ticked good are the ones with high consumer demand. And the ones I tick asterisks are the ones with low consumer demand. So if they have low consumer demand, I noted here that rate cuts for countries with high consumer demand is unlikely to affect its currency's preference in forex markets. The fact that, okay, that a country is going to have a rate cut, okay, doesn't mean that it's going to that other countries' currencies are going to excel above that currency in forex market. No, it doesn't mean that. But what we are looking at is the consumer demand. If the consumer demand of a particular country is high, even if there is a rate cut in that country, it will not stop that country's currency from having a high preference in forex market than other currencies. It wouldn't. It wouldn't. So that's what we're actually looking at. So that's why I have taken note that the United States is going to, okay, which has a high consumer demand, will have a high preference. Its currency will have a high preference in forex market. So what am I saying in general? What I'm saying is that the United States currency, the dollar, will continue to dominate the market for some time now. Even though in the near term, if you go to the 5 minute chart, sometimes from technical view out, you may see that the Euro USD may go up, okay, against the United States dollar, but then the main direction, if you go to the 4 hours chart, the daily chart, you see that the main direction is that the Euro USD is going to sell, okay. All those like GBP USD also is going to sell, and the United States will maintain its trend. So the prediction for this week is that we're going to have a general sellout for other currencies, and the United States will continue to maintain its strength.